Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today. And now, on with the show. Welcome to another Provider Spotlight episode of the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm really excited to have our next guest on the show as she has experienced so much in her career as a CRNA and as a real estate investor. Maricela Soberanes holds a business degree from her native country and a DMP in anesthesia from Baylor College of Medicine. She started building a rental portfolio in 2005 with the private acquisition of a small multifamily property. Together with her husband, Chris, they founded Upplex Living, a private equity investing firm in 2017. In 2019, they founded Upplex Rental, a 100% veteran-owned and operated private equity investing firm. They are the owners and operators of 236 multifamily units with wide-ranging experience. So let's get into it. Maricela, welcome to the show.
Hey, Bobby, thanks for having us, and thanks for having this amazing way of just being networking around people that is thinking and wanting to do the same thing you want to do. It's very empowering. Thank you for inviting me.
Awesome. I'm happy to have you here. In the conversations that we've had, you're really moving and shaking. So I'm just so excited to have you on the show. But so let's start at the beginning. Let's talk about how you found yourself getting into kind of this Plan B that you've started.
Most definitely. It is actually probably my Plan C. If you count back my beginnings in Mexico, that was my business administration degree. And then, CRNA being my plan, I guess, A or B. And then when all fails, then you start developing another plan. So my other plan, I would say my alternative plan is real estate investing. And how did I get here? Oh my goodness. It kind of built together as I became a nurse in 2003, I believe. Then I went to CRNA school rather promptly. And no, 2003. Anyway, I'm gonna mess up the years if I start.
It was a while ago.
That dates me. No, wait. Let's erase that. Just kidding. But, so yeah. Well, once that I graduated from nursing school, I started by buying my first. At that point, it was just my residential. It happened to be a duplex, so I house hacked that. And a year later, I was admitted to CRNA school, so I had to move away from Texas. So I went to Tennessee, and I left behind the rental unit, which was then profitable. It was being rented both sides, and I was able to pay all the bills. Pretty much the house or the duplex was being paid by somebody else for 3 years. Then after graduating, I came back and I occupied one of the units again, just to kind of get me back to, savings and paying off some loans, which I pay off $250,000 in 18 months for the loans that we acquire in CRNA school.
It's amazing what you can do when you really don't have to pay for your living expenses. That's the amazing part of house hacking.
Yep. House hacking, just have somebody else pay for your bills. And then in the meantime, I build up my savings. After that, I got into a second primary home, which again, I was able to, so also I paid off the duplex. So I was able to pull a line of credit, home equity line of credit, HELOC from the duplex and roll it. Actually, I went in to get a second home, which I ended up living there for about a year and a half, and then I started doing 1099 CRNA locums full time. So I started traveling. at that point, I put the house in Airbnb. It was 2 bedrooms being rented either whether together or separate. It was fully rented, like it was completely booked months at a time. So,
And you said this was in Texas. I didn't mean to interrupt you, but I want to see where, because Airbnb doesn't work everywhere. But where was this one located?
and Austin, Texas. It's a central area in Austin, Texas.
Okay.
So the desirability and the central location was one of the biggest things that was that was very helpful. So yeah, for 5 years, 6 years, I was pretty much traveling as a CRNA, and the house was being paid by itself. Then in the meantime, because I have joined the military, I don't know if we mentioned that, I joined the Navy Reserves, and I was activated to go overseas. And while I was in deployment, I got quite a bit of downtime compared to, pulling regular CRNA hours and being just fully busy with school. I have finished my doctorate degree at that point. So I found myself with like a lot of empty time. So I was like, okay, I'm gonna join the Navy. So I joined the Navy. I was activated. And while I was activated, that's when I started learning real estate as a business and as a way of building wealth, and as a plan, whatever you want to call it, as a plan that's going to get you out of the hospital. It's going to build you wealth. It's going to pretty much make you, be owner of your time and have control of your finances and your time. So I learned a lot of techniques that you can use. And when I came back after, having my income as a CRNA non-tax, because I was in a non-taxable area and non-taxable territory. So when I came back to the States, I wanted to buy now real estate investing assets. So I went to the traditional bank and I said, hey, I want to buy a fourplex. They said, nope, you don't qualify. Your income last year was less than that. It's a poverty line. So what are you thinking? So yeah, that's because
Wow.
I wasn't, it was nothing was reported. It was non-taxable, which was great for me. I was able to save all of that money, but in the eyes of a traditional bank, I didn't qualify for a loan. So that led me to go into different sources of they feel more secure. The banks feel more secure when you have a full W-2 job where you can probably lose at any point, and you don't have, anyway. Don't get me going.
For people that were listening, I gave a big eye roll when she mentioned that she didn't qualify for the loan. So that's why she's going into more detail here, because I gave a little eye roll. So that's my fault. But it's amazing. The banks will come down on you and just, you can qualify for anything under the sun, but they'll find some little thing, and it doesn't matter sometimes what your true income is, what your cash flows are. It's about what is there for tax purposes. So anyway, go on.
Absolutely. And I like to highlight that. I like to talk about that because there's a lot of people, especially if you're transitioning from a full-time hospital work and going into 1099, you have to have 2 years of proving taxes, filing taxes at 1099 before they even look at your finances. When in the meantime, you're accumulating all this extra income where you can probably go and pay in cash, but nobody wants, if you're an investor, you don't want your money to be tied up in one property. So that's why I like to talk about that and make a big stink.
I had a similar issue with a small single family where we almost didn't qualify because of my 1099 income. I hadn't had enough time in my 1099 position yet. And so my wife ended up being the sole owner of it. Thankfully, she qualified on her own. But
yeah. And that's a big issue when you're trying to get in the real estate investing and business, and you either you feel like you're ready to leave your W-2, and that's one thing that sometimes holds you back. Like the banks will see you with most security when you have a W-2, when in fact you could do much better without having that W-2.
Yeah.
But
anyway, continue with your story. This is wonderful.
So I ended up going to a non-traditional bank. I was more investor friendly, and I was able to secure not only that loan for that fourplex, but the person that was selling that fourplex was also retiring or just unloading some of her inventory. So I was able to buy 2 fourplexes from her, and I had a package deal, and it just was a win-win situation. And so yeah, that put me at 11 units back to back, pretty much. In the meantime, I was still serving in the military. I went to Sicily to do anesthesia relief, and I met my husband, now partner. And when I told him about what I was doing, like he didn't roll his eyes like you, Bobby. He was like, "Really?"
Burn.
I was like, "Okay, now give me your money." So
That's right.
that
Yeah.
was my first decision. Just kidding. And so yeah, he after now a year once we got married, we joined our portfolios, and we just decided to at that point I was talking syndications. Like I told you, I did a lot of reading and studying the real estate investment, and I'm like, syndications is where it's at, especially for high earner professionals, where you get your money, I mean your time is better spent doing what you're good at and getting paid good, but you also need the tax deductions. So I was like understanding all those concepts and
Mm-hmm.
totally trying to dive in, and my husband is like, well, I'm still serving because he was active duty at that time, active duty and the Navy, and he retired last year. If you're listening to this like 20 years from today, because it's still going to be usable information, that was in 2020 when he retired. So he retired then, and that's when he said, okay, well, now I'm retired, we can look into syndications. Well, in the meantime, from 2017 to 2020, like, okay, if you don't want to go syndications, we're going to go on maniac acquisition phase. So that's what we did. We went from 12 units to 35 doors. And this is us just owning, or it was our portfolio, personal portfolio, no other partners. And we also self-manage that with a full-time job,
Ooh.
of course, from a distance. Because again, remember, I was traveling as a CRNA, so
Yeah.
in a given time, I was in Kentucky, Virginia, New York, you name it. And so yeah, that's another area I like to highlight, because a lot of people it's scared of landlording, which it can be, but it is doable. So I have tips for both, for the people that just want turnkey ready to rent, and for the people that want to like get in their landlord hat and pursue that career, because it's also a career. Um,
Mm-hmm.
so yeah, that was 35 units, and then when we both felt like we had a little more time, that's when we came into syndications, and I think that's kind of where our paths cross, you and I, Bobby.
Yes, that is correct. So that's kind of how we've found out more about each other, for sure, is being in some meetups and things like that, getting introduced that way. So, how you talk about your career as a real estate entrepreneur and your career as a CRNA have really been sort of intertwined. I was wondering about your career as a veteran as well. How has being a member of the military and specifically a military CRNA, how has that helped your investing career?
um I will say the time that I took when I was deployed, I was 101, so I was the only anesthesia provider that I was available for the base, over 7,000 members. So I was pretty much on call 24/7 for the entire deployment. So another thing that we couldn't do, the surgical team, was we could not leave the base or take any leave, any vacation, because if we were for some reason hurt or damaged, they have to replace us, and that was very lengthy, and just not the best option to have. So we were not allowed to even play some of the rough, sports that were played. We were only allowed to run. So that we were really sheltered. So because of
Yeah.
that, I was either working on call or working or exercising. So that's when I found myself with a lot of free time, just to dive deeply into the real estate investing. That and just the connections that I make along the being in the military, and just talking about what I do and the outside, and some of those connections have solidified to become more like either mentees, people want to be mentor and how to get started, or some potential investors that are looking at what we're doing and how we can help them invest their money. So
Okay. Have you been able to take advantage of any of the VA loans for home loans or anything like that?
Personally, no, but we had a duplex that we bought that we're planning to do Airbnb, and due to the city ordinance changes we were not on list because we bought it on the name of the LLC or the business, and because of that we could not Airbnb it. And again, this is an Austin highly desirable area, so we decided to so only primary owners occupants can do Airbnb. So we decided to put it sell it to my husband with his VA. So our company sold it to my husband, and he used his VA. We pull all the money that we have, like the purchase money and the renovation money, and then so that's how we were able to use it. And now we were able to use it as a short-term rental in Airbnb, which it cash flow very nicely.
Okay, fantastic. Fantastic. Well, so you mentioned having some tips for people, whether they want to do property management or turnkey property. So let's start off first with the managing of properties. What does that look like from a distance?
So the main thing I can share here is that you have people that is going to help you boots on the grounds, and not just one team, but several teams. So for example, a handyman, have a couple of them in case one cannot make it, the other person could, and then just make sure you have options. Have a general contractor that you might need, especially if you're in acquisition phase, that person can pretty much go and look at the property, do a walkthrough, a video, or a FaceTime, live video where you can see. So have the same thing in Austin, in Texas, you want to have a air conditioner technician. So you should be able to form a team that is going to do what you cannot if you're not there physically, or you cannot make it there, or if you're not willing to, because anytime that you're buying a property, you should be budgeting for not just maintenance, but also management, property management. So those are the things that I'll say. Make sure that if you're doing it yourself, that you allocate that expense, because it's not a savings. You will save because you're not going to pay anyone, but do not assume that if something comes up, you might have to pay all of the allocation because somebody's overcharging you or charging you for convenience because you don't know what the problem is. You have to send somebody. So sometimes those services are going to be priced higher than regular, just like, hey, I went and look at it, it's not emergency, just when you get a chance. But you cannot make that determination if you're not there, or you don't have somebody to just do that part for you.
Yeah. Okay. Okay.
And
as far as the turnkey properties, what are some tips and tricks that you've taken in for that?
We are a value add. That's what we do. So that way, when we fix and we remodel, we know that we do it to the, we call it tenant approved. We have, I would say don't expect, because you always want to expect something is going to break the second you turn away from that door. But we're confident that we are fixing to a highest quality, so that when you do turnkey, you have to be pretty much at the mercy of whoever did the turnover and the fixings, that something is not going to break, But and if that's the case, you still have to plan for having that expense, and especially even if you have a home warranty, the home warranty just gonna it's an umbrella that at the end of the day they're gonna put so many obstacles and friction so that they are gonna pretty much squeeze themselves out of the responsibility. So you have to be aware of that and have a healthy cash reserves for any roof collapsing, which happened to us.
Oh, so okay, let's get into some of these scenarios you've been in where something just went wrong, and how you got out of those.
Okay, but promise me that we're gonna get to the hands off. You just give your money to somebody and somebody invested.
Yes. Oh, we're getting there. That'll be the next thing. Don't worry.
Get all of your audience here.
Oh, I know. I'm not trying to scare anybody off. I just like to, we like to know about the pitfalls and stuff that you can get into. But more importantly, like, you're so successful, but yet you've had some of these trying times. So I want to look at that resilience and see what happened there and how you were able to overcome it.
Awesome. Actually, yeah, I'm preparing one of the conferences we're going to have. We're going to be delivering some of this content, like 10 things that I did wrong in the real estate, and this is how much they cost me. Let me avoid those for you. So the first one, my first duplex, I didn't have credit. I didn't have bad credit. I just didn't have credit. I was used to paying everything in cash. I was like no debt. I didn't anything that I own. It was like cash. That was my mentality, and I have full control of my money in my savings accounts. So none of that was registered to any of the credit bureaus. So that was my mistake number one. So when you're getting ready to start, you have to have a healthy um, score as what do you call them?
Credit score. Yeah.
Because that's what's going to give you your rates and your ability to finance and make more negotiations. So that was my number one. Number two, I thought I had enough money saved apart, but I also was fixing to go full-time CRNA school, which you're not allowed to work. So the roof and the duplex, the glorious duplex that I left behind, again, I turned my back to the door and the roof literally collapsed. No collapse, but like it was some store damage, and that went from that to water seeping into one of the bedrooms. So, and I was away. I was away. I was like, okay, well, I have some reserves. Let me go ahead and contact somebody, call somebody, again, not knowing who your team is. I didn't have a person that I trusted. I just called somebody that somebody recommended. So that somebody did what he could in the beginning, and then was I get scared to the project was to be too big. He took his money, like he never turned back and say, hey, here's the money back, because I couldn't do it. So you have to be careful with that, making sure that your contractors and that you know how to treat them. Now, no contractor goes and the first day with a 50% down. Like, nope, there's not a way we do business. And I have a very, very strict SOP when it comes to dealing with contractors. So more tips on that. I'm not sure we want to every whole but of this, but have a network of contractors that you trust and that they're going to help you. So anyway, I had the money, but then after giving my money away, I didn't have the money. So I have to inquire more depth to make the house livable, because there's two families expecting that. So that was another one. The other one, I bought the 2 fourplexes that I told you. I was somewhere in Virginia, I believe. So I heavily relied on my contractor and my handyman to go walk around and do all the units. And I was on the phone, but still that's not enough. You really need to get there and take a look. And you're not the expert. Even if you're there and walk, make sure you have somebody that is going to be on your team. After that, we did the inspection, of course, and there was a lot more than naked eye of the contractor just didn't look, because contractors are looking for different things, right? They're looking for, is this livable? Okay, yes, there's 4 families living there, you're good to go. Like, no, I don't have to paint because the people is living there, but you know what is behind the paint. So a lot of that it has to do with experience and having the adequate team on your side to mentor you and to guide you so that you don't make those mistakes. So, but I got lucky, and it was probably in last year that I went into the last unit of those 8 units. Like that's how steady that property was. So it took me about 3 years to get to all of them, just because it wasn't needed. Again, I did the best that I could activating my team, but that could have been not enough. So just that, but sometimes you just have to do what you have to do. The other thing that I did or I didn't do is I was doing the investing by myself. So if you I think you mentioned 2006 was the first duplex. 2017 I was all by myself. So how slowly I continued to grow. It was from 0 units to 11 units. Then getting with a partner, which is also my husband, from 12 units to 35 units. So that's from 2017 to 2020. And then we become more involved with the investment community outside of just me and him. And we found ourselves surrounded by people that were just intelligent. They were the same mindset and same desires. And we went from 2020 October, from 35 units to 711 units to last month.
Yeah, that's 711 units that they are now a part of. So let's talk about that. you wanted to get into how to put your money into something and kind of be able to back off a little bit. Let's talk about how you were able to do that and really expand your portfolio.
Yeah. So part of it was, again, educating ourselves in the syndication, understanding the language, understanding how to compare apples to apples, being around people that's the business profile that they were growing and they were showing us. We also joined masterminds, 2 mastermind communities, which if you haven't, or your audience have not, tap on that. Definitely highly recommend it. Again, just being around people that are going to gear you to where you want to be, as far as they've done it or they're actively doing. They're not going to dismiss your desires for grow bigger. Because I mean, how many people, and there's nothing wrong with being 35 doors on your belt, under your belt, be done with it, I'm retiring. That's good, that's awesome. But hey, there's more too. And so back to the way I and my husband, we were able to put our money to work in other people's deals, is by they did the work. We pretty much leveraging their knowledge, their experience, and their time. And that's what a syndicator, the operator, is going to do for you when they offer you a deal. They're going to go, first of all, they have to have the experience. They have to have the financial liquidity so they can get the loan and put the deal under contract, and then come to closing. And when they come to the investors, they're going to show you, hey, this is an opportunity that I have so that I can help you grow your money. I can help you reach your financial goals. And that's the teams that you want to be looking for as a passive investor. Somebody that has proven that they make money for other people, that they're attentive, they have the time to be there to take care of the asset. Because it's not just finding the asset and then getting the investors' money. Then there's so much more work that goes in the back of that business model. And for us, we were able to link with some very credible and successful teams that they were bringing deals for us. And we have the capital. We wanted to learn the process. And that's how we got started. We put our money in other groups' deals. And at the same time, we are learning by not only just studying, but also putting our money there, because that puts you in the front seat of webinars, updates, and boots in the grounds, visiting the properties, and you see firsthand how that business functions. So at this point, so we also diversify to include self-storage facilities. So we joined venture in a self-storage facility.
That's a whole other podcast too. I mean, that's something it's a whole other topic, and man, that's I'm excited about that one too, because that one, what we try to do with On Call Capital is we want to not just offer apartment syndications like you were just talking about, but we also want to offer other alternative investments like ATM funds and self-storage funds and mobile home parks, different things that people can invest in. And that way you're investing in things that make sense for the market where it is right now, not necessarily, where it was 5 years ago. And so we want to remain nimble and able to move around. And you've been able to do that personally with your own investments, which I think is a fantastic thing. So speaking about the self-storage stuff, you've gotten into self-storage. You've also gotten into mobile homes as well, right? Or maybe about to?
Yeah, I was going to say, we're exploring that area for sure. We've done private lending money. So we pretty much buy other people's flips and they flip them, they make money and we make money. So it's been a win-win situation. Again, It's just diversifying, making your money go to work anywhere. And that is, the markets that we go is we either understand it and have some way of controlling it, or trust and join with people that's what they do. That's the specialty. We also done investing in a conversion from a hotel to a apartment. And again, that's not what we know or what we control, but we trust the team that has put that together. And
I think that's a very important point too, is that when you're investing in these types of deals, you're really putting your trust in the company that's running the business plan. It's similar to investing in stocks where, you're a passive investor when you invest in Amazon stock. You're trusting that Amazon as a company is going to run their business well and make you money. by causing their stock price to go up over time by driving revenues. And it's the same thing with apartment investing. You're trusting a team to implement a business plan that increases the value of a building. And so I think this has been really wonderful, Maricela. So what have we missed? Anything you want to add here towards the end? We're running out of time. I'd love to keep you for another hour. But I know our listeners, we're running out of time here. Maybe we'll have to have you back on some other time to talk about some of these other ventures. But what have we missed? What'd you like to say?
Thank you. That's generous. Well, now we are again in shifting or way of serving. And the way we're giving back is educating others. So we're passionate about sharing what we know, what works for us and what didn't work, so that others avoid those mistakes. And we are mentoring, we are offering personal mentoring for people that wants to get started, or people that want nothing to do like I didn't, and they just want to put money to work as a passive investors. So we have those two ways of educating and serving others. And we also have accountability app and some resources for financial literacy education that we have put together.
Awesome. So how can our listeners get a hold of you, Maricela?
Well, LinkedIn, that's one of my active platforms. I'm also on Facebook and Instagram. I am from financial survival to financial independence. I probably should send you the link. That way we don't get it messed up. But
I'll set that in the show notes.
Yeah. I'll be happy to connect.
So, yeah. And okay, well, I mean, this has really been a pleasure. I can't thank you enough for being on today. And best of luck to you and Chris in the future. I'm looking forward to actually being able to work with you guys in the future too. I think, these things will hopefully work out, to our mutual advantage. But I know our listeners are going to get so much value from what you provided today. And I really appreciate you being here.
Thank you, Bobby. Appreciate you.
All right. The thing that has always stuck out to me about Maricela is that she is just a doer. The only time she seems to hesitate is when she needs to learn more about something before actually going to do that thing. There's just no analysis paralysis with her. And sure, she's had obstacles along the way, but those are simply learning experiences that help her to add more tools to her own tool belt. Any conversation I've ever had with Maricela just makes me want to go out and do. And I hope that it has for you too. That's going to do it for us today. I hope you'll join me next time on the Plan B CRNA podcast. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by OnCall Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find OnCall Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.